Ladies and gentlemen, I welcome you back to another video. Thank you for taking some time out of your day to be here with me. I'm Patrick Zimmerman, and today we're talking about the 10.3% dividend yield of Annalee Capital Management. Annalee Capital Management is a real estate investment trust, commonly known as a REIT. We've talked about other companies in the REIT sector, such as STOR Capital and Innovative Industrial Properties. I encourage you to check out those stock analysis videos if you haven't seen them already. The reason Annalee Capital Management, stock ticker NLY, is a little different is because they are a mortgage REIT. Today I first want to talk about what mortgage REITs are, the benefits of owning units of a real estate investment trust. Then we'll look at the fundamentals of Annalee and stick around till the end of the video to gain a better understanding of Annalee Capital Management's business model, as well as why I think we should see a share price increase as well as a dividend increase for a few years to come.
Skies are clearing up.
So there are two types of real estate investment trusts. The other two videos on this channel, as I mentioned before, STOR Capital and Innovative Industrial Properties, are equity REITs, which means they buy properties and they make their money mostly off rental income. The other type of real estate investment trust is a mortgage REIT, which invests in mortgage-backed securities, and related assets. These companies, such as Annalee Capital Management, generate income off of the interest payments paid on said mortgages. The benefits of owning a real estate investment trust is that they offer greater liquidity than traditional real estate. It'll be a much faster process for you to close a position in which you were invested into a REIT rather than to sell one of your rental properties. Additionally, they offer diversification as they have low market correlation to your normal stocks. The most beneficial factor of real estate investment trusts is that they are required to distribute at least 90% of their annual taxable income to the shareholders. And additionally, the cherry on top, over the past 40 years, public REITs have outperformed the S&P 500. Annalee Capital Management's business model is to consistently generate net income for distribution to its stockholders, and they do this by building up a portfolio which consists of securities, loans, and equity, and they focus on both the residential and commercial real estate markets. They are currently trading at $8.36 and are down 14% on the year so far. You can see that they've had kind of slow and steady growth since that March coronavirus drop, and I believe they'll be able to grow their share price back up to that 52-week high of around $10. The 52-week range for Annalee Capital Management is a low of $3.51 with a high of $10.50. The company has an $11.689 billion market cap with a 1.21 beta volatility. The company currently has an earnings per share of negative 49 cents, and they are due to have another earnings report come out on Wednesday, February 10th. Now, I believe that their earnings will go up this time around. We've seen Annalee's earnings throughout 2020 increase steadily as the year continues on. And if you stick around till the end of the video, we will talk about why Annalee Capital Management are in a prime position to continue to increase their earnings through 2021 and 2022 as a result of the almost non-existent interest rates currently. Annalee Capital Management currently has a dividend yield of just under 10.5%. This is an annual payout of 88 cents per share. The company has a payout ratio of 80.78%, which is very good for a real estate investment trust. It's not exuberantly high, but they're still required to pass through a vast majority of their annual earnings. Now, the 5-year growth rate is negative 5%. That should raise some mild concerns. Over the past handful of years, Annalee's share price has slowly been dropping from around $14 to $8. And alongside that, their dividend rate has also decreased. But again, if you stick around till the end of the video, I'll show you why I believe that those years of dividend cuts and the drop in share price have kind of leveled out, and now Annalee will continue to increase their share price and dividend in the near future. So here is the all-time dividend history of Annalee Capital Management. You can see that there are quite a few ups and downs. They were really able to increase their dividend significantly from July of 05 all the way to July 2010. And this was the same period as the 2008 housing market crash. Additionally, you can see that that dividend has pretty much leveled out around 25 cents a share as of January 2013. And the consistency has really been there, as we've pretty much been staying right around that 25-cent a share dividend price. Annalee has a price per book ratio of 0.93, which means the book value of the company is slightly larger than the current price at which Annalee is trading at. And additionally, they also have a forward price per earnings ratio of 7.22, which is exactly where we want to see it. We don't want that number to be astronomically high, but we also don't want it to be too low. It should be right in that 5 to 10 range, give or take a few. These numbers are probably some of the more concerning numbers which we'll talk about today, is that minus 35% profit margin and a negative 0.51% return on assets, as well as that negative 3.8% return on equity. Now, although these numbers don't look great, they're really not the most important numbers to focus on when analyzing a real estate investment trust. With that all being said, an operating margin of 84.4% is fantastic. One of the reasons that we see this so much higher than a traditional stock is because it is a mortgage REIT, whereas a traditional stock generally would not have a profit margin of negative 35%. Again, this is a mortgage REIT, so these numbers need to be looked at and understood a little bit differently than a more traditional company. The thing you want to really focus on when you're looking at real estate investment trusts is the cash flow, how much they have on hand, how much debt they have, and the funds from operation which they are receiving annually. Currently, Annalee Capital Management has $317.8 million in total cash on the balance sheet, and they have $73.23 billion in total debt. Another number which should be mildly concerning is the current ratio of 0.17, which is the ratio of assets over liabilities. Because this number is significantly under 1, that means Annalee as a company currently holds many more liabilities than they own assets. Because of their business model and them belonging to that mortgage sector of real estate investment trusts, their asset to liability ratio will be a little bit different than some more traditional companies. But it would still be nice if they were holding some more income producing assets and taking out less debt and accruing those liabilities. Here are the analyst price targets. Annalee is currently rated a 1.9, which is a buy, and the average price is estimated to be $8.71 with a target low of $8 and a target high of $9.50. Before we get into the business model and how Annalee Capital Management, NLY, make their money, I want to remind you guys to like the video if you're enjoying the content so far. Subscribe to the channel and turn the notification bell on so you can stay up to date on the videos which I will continue to post. And also leave me a comment down below letting me know what you think of Annalee Capital Management and if you have any experience with owning positions in mortgage REITs and how you're doing with them. So before we can understand how Annalee Capital Management makes their money, we have to understand what a agency mortgage-backed security is and how they work. Banks loan out money to consumers so consumers can purchase homes and real estate. The mortgages are then purchased from banks by other companies and investors. So the borrower now owes money to whoever purchased said mortgage. The mortgages are then grouped into pools in order to create financial securities, and then these pools produce income for the investor through the interest and principal payments of the borrower. Now, an agency MBS is a mortgage-backed security which is issued by one of the three quasi-governmental agencies known as Ginnie Mae, Fannie Mae, or Freddie Mac. What makes agency mortgage-backed securities more beneficial than just a regular mortgage-backed security is that these three quasi-governmental agencies are responsible for backing the borrower in principal, which shifts a bit of risk off of Annalee Capital Management and onto the original mortgage lender. So the commercial real estate portfolio of Annalee Capital Management is $2.5 billion in assets. The asset type is currently weighted at around 35% equity, 20% whole loan, and then 31% commercial mortgage-backed securities. Additionally, another reason why I like Annalee Capital Management is because I believe that their portfolio is diversified really well. You can see that they're in multiple different sectors, 29% retail, 28% office, 14% multifamily homes, 8% hotel, 10% healthcare, as well as the fact that they are diversified very well throughout the country. 14% of their commercial holdings lie in California, 14% in Texas, 12% in New York, as well as other states such as Florida, New Jersey, Virginia, and our nation's capital, Washington, D.C. The company currently holds $76 billion in total securities, and $74 billion of that 76 are held in exclusively agency mortgage-backed securities, which, as I explained before, offer a little bit of safety and hedge the risk of Annalee's business. Additionally, they also hold $152 million in residential mortgage loans and $573 million in commercial real estate debt and preferred equity. This means, as a whole, Annalee Capital Management currently has $2.8 billion in total loans. But on the other hand of that, they currently own $87 billion in total residential and commercial investments. Annalee currently has $102.7 billion in total assets, and $96.3 billion of this consists of assets in that agency MBS group. And according to them, they are currently ranked number 1 out of 8 in the agency MBS sector. All right, the moment everyone has been waiting for, why I think Annalee Capital Management is in a great place to have the ability to continue to increase their dividend in the near future, as well as for us to see a hike in that share price. I want to remind you again to smash the like button down below, subscribe to the channel, and leave me a comment on whether you believe the 10.5% dividend yield of Annalee Capital Management is safe and should be held in a portfolio at this time. So Annalee Capital Management makes money by the spread between the assets they buy minus the yield they pay for the funds they borrow. Essentially, they receive cash flow from their investments, and then they have to pay a portion of that as interest on the loan they took out in order to purchase said asset. So you can see here on this chart, since about 2011, that net interest spread has been decreasing all the way up until about 2019. And from the year 2019 to 2020 is the first time that we've seen that net interest spread cross over 2% since about late 2011, early 2012. A 2% spread seems very small, but you have to keep in mind that Annalee Capital Management currently has over $100 billion in assets, which could result in a substantial funds from operation increase in the future. Now, one of the reasons that that spread has increased so drastically over the past year above that 2% line is because the Fed has cut interest rates almost to zero. So what Annalee Capital Management does is they borrow money for 60 to 120 day periods with extremely low interest rates. They then purchase long-term assets with this money, and said assets bring in higher returns than the interest they owe on the money they borrowed. So in a way, coronavirus has really done good things for Annalee Capital Management's market. Because those interest rates are down, they're able to borrow money to purchase assets at a lower price. It also puts them in the position to be able to increase that spread, bolstering their profits. Here's why I believe NLY will have the ability to increase their dividend for years to come in the future. If we look from 2006 to 2011, Annalee's dividend went from 11 cents per quarter all the way up to 75 cents per quarter. This was because the Federal Reserve cut interest rates after the 2008 housing market crash to almost 0% interest, which is the exact same situation that we are in right now. So you can see on this chart here the dividend by quarter from 2006 to 2011. You can see right in 2008 that dividend increased from just over 30 cents to just below 50 cents. And I believe there's a very good chance we'll be able to see the same thing with Annalee throughout all of 2021. Another thing to know about the Federal Reserve Bank and interest rates is that although they drop to extremely low rates in the snap of a finger, as we've seen this past March when coronavirus originally happened and the country shut down, the interest rates were dropped in a matter of weeks, almost instantly. On the other hand of that, in order to get the interest rates back up to where they were pre-COVID-19, that is a very slow, long uphill battle, which takes plenty of time. It's not like we're just going to wake up one day and the Federal Reserve will have interest rates back upwards of 3%. Because of the current economic climate and historical data surrounding Annalee Capital Management, I believe that this company is in a great place to succeed in the near future, as they should be able to increase their dividend and hopefully their share price will increase as well. I hope you learned something from the video today, whether it be how a mortgage REIT works, what to look for when viewing the fundamentals of a real estate investment trust, or I just piqued your interest talking about a 10.5% dividend yield. Don't forget to smash the like button, subscribe to the channel, and leave me a comment below if you would like me to dive into any other stocks. As always, I'm Patrick Zimmerman. Thank you for your time, and enjoy the rest of your day.